Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the 3rd day of November 2014, and this is the daily report for gold and silver. We have a continuation of the sell-off which began some time ago. We have equities markets nominally higher, dollar higher on the day, gold and silver lower. First to gold, current print screen is 1166.43. It has had a low of 1164.20 and a high of 1174.70 on the day. Silver also trading lower this morning, actually hitting a low of 1582, a high of 1633, currently at 1644. As we said last week, in my best estimation, we would see silver go to $16 per ounce, and we have seen just that. So traders, what are we looking at? Of course, we're short at 1208, so we've got some profits. We've lowered our stops to just above 1200. We're going to look at a daily chart to see where we might lower it. We are at a point, though, right now, especially this 66, which I am looking at as either a potential to find support or a potential for a hard break. Now, why am I looking at the market in such a precarious way to say that we're going to get either a hard breakdown or find support? And to show you what I mean by that, we've really got to look at another chart. Let me go ahead and pull that up. So traders, we're going to look at this through two charts, a 2-day chart and a weekly chart. First to the weekly chart. Let's see if we can't just blow this up a little bit higher so we can get a better idea of what I'm looking at. And here's what I'm talking about. We've talked about this triple bottom. We absolutely breached the triple bottom. There was no doubt because we had this low here. And if you look, we had this market really a couple of lows below that, but we still signaled it as the brass ring. However, right now, if we look at this particular line at 66, we are right at this line. So if there was ever a place for gold to find some support on a technical basis, this would be it. Now, of course, this market doesn't trade on technicals. It trades on fundamentals. And so the key is the dollar and the key is the equities markets, because as long as they're strong, I think we're going to see silver and gold be weak. I believe also that should they come down, we could see another bounce in the market. But for right now, we're at this really precarious position where we've seen this market trend lower and right to this particular point. So traders, this is the other chart I was talking about now. This is a 2-day chart, and I've exaggerated or widened the body size of the candle just so we could get a better feel. But here's the key. When we look at it through the eyes of this 2-day chart, we can absolutely say, when we look at this low here and this secondary low here, let me get it all the way across and make it into a line. There is no doubt we have absolutely broken below this particular point. However, this 66 is still in play. And so for that reason, I have some caution here. My sense is that we'll probably continue to see lower pricing in gold. However, with the market right here, we want to be really cautious. We've got some really good profits in the market right now. And if we see some sign that we're going to see a little bounce in gold, we're certainly going to want to consider taking profits. However, if the market continues to drift lower, and it does drift to, the mid 1100s or even the low 1100s, this could be a home run here. So in that case, I want to be able to maximize, as we always say, any kind of profit potential, minimize risk. And as you know, it's very, very good in theory. It sounds really good, but it's very difficult to actually achieve, but we're going to attempt to the best of our ability to do just that. So as I said, in terms of looking at the various markets, we want to see, exactly what we can ascertain by looking at the S&Ps. This is the S&P Mini. We are right at that record top right here, and the market is closed already for the day. But and I'm just getting used to the fact that we've gone into daylight or out of daylight savings time for the rest of the world. Of course, here in Hawaii, we stay the same. But you can see we've matched up here. That's with the Standard & Poor's. But traders, take a look at the dollar index, and that's what we have up now. As you can see, I had a one Fibonacci retracement on this chart, and that is because we looked at the beginning of the rally here. We definitely got some softness here. It came down pretty much to a 38% retracement. That would be here. and then barreled back up, of course. It has now exceeded that top, is trading at 87.42, so it's above the top. The top was just below 87. So as you can see, the dollar continues not only to strengthen, but to travel to new ground that it hasn't seen in years. And so for that reason, we believe as long as this dollar stays strong, we'll probably see continued weakness in both gold and silver. So traders, what about silver? As you know, we talked about the fact that we believe that silver would probably go to about 16 per ounce. It's at 16.13. That's, of course, this line right in here. And if it does not hold this area, or if we see more downside in gold, the next real level to look for is this bottom here. We talked about this a little bit on Friday, but this bottom here corresponds to about $15 per ounce. So if we see continued downside pressure in gold, we could look for silver to break 16 and trade into the 15s, bottoming out at about 15 based upon this low here, which is back in the beginning of 2010. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.